Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to another episode of Investment Matters. I'm your host Adnan Bazir, and in tonight's lineup we'll be doing the weekly market update with Abdur Rauf Hanslow. We'll then continue our financial planning series with Muhammad Jaffer, and then we'll continue our series on estate planning with Mr. Shaukat Mukaddam from Legacy Fiduciary Services. So do stay tuned as Abdur Rauf will take us through the weekly market update. Shukran. Assalamu alaikum and welcome back to Investment Matters as we'll continue our discussion on estate planning with Mr. Shaukat Mukaddam. He is the Director of Legacy Fiduciary Services. Assalamu alaikum, Shaukat.
Wa alaikum assalam, Adnan, and it's good to be back again.
That's great. Shaukat, we've touched on the mechanisms of estate planning and just in terms of from a Muslim perspective, Islamic perspective, we obviously confined to Sharia compliant wills or setting that up. Let's just get an understanding of how what that entails.
Yes, Adnan. Look, obviously, the Quran spells out very much clearly how wealth should pass on in a particular mode and in the family setup, really. The verses particularly are Surah An-Nisa, verse 11 and verse 12 and verse 176. Yes. In that verse, Allah subhanahu wa ta'ala spells out that what the proportions are and so on. But more important, in the verse, all the proportions are spelled out, but it's stated that it's after legacies and debts have been settled. That's very important. Every time you read the verse, it will say after legacies and debts have been settled. And obviously, we will cover that. But the truth of the matter is, if you look at these verses, it tells you who can inherit, what proportions, in what proportions they can inherit, how they may inherit.
Yes.
There is a mechanism of one family member blocking another family member, and ultimately it reaffirms that the male will get twice the female, really. So that verse spells out very clearly. So how do we go about this? So first of all, we have to settle debts, as I indicated. And that's quite easy. Debts that you owe anybody, money, whatever the case is. You could also pay certain dues in respect of zakah, certain payments in respect of salahs that you've missed and all that. That will all come out first. Okay? So you've gathered all the wealth, yes. You've computed the figure, you've settled the liabilities. After that, you can make a legacy. That's commonly known as the wasiyah.
Yes.
The important part of the wasiyah is that it's only a maximum of a third of that balance. You cannot give more than a third. It can be given to non-Muslims. It can be given to charitable organizations. It can be given to those who don't qualify as fard beneficiaries.
Yes.
Those who have been specified and that did not receive anything, they can get out of this one-third allocation. More importantly, out of this one-third allocation, one should always make provision for possible grandchildren of your children that could predecease you that won't qualify as a fard beneficiary.
Yes.
People must understand that the one-third mechanism gives you the opportunity. In other words, if I had a daughter, she only would have inherited, but if she predeceases me and left children,
yes,
they are not fard beneficiaries. Okay? Therefore, they won't inherit in terms of the Islamic Sharia compliant will.
Yes.
What should happen is that you should have a clause, as a preamble clause in the will, something to the effect that kindly provide to them what my daughter would have got out of the one-third in this illustration,
yes,
effectively.
Okay.
So it's a very important point that people assume that the lineage automatically takes place. It does not take place automatically. In most cases, it does not take place. In some cases, it does take place, but in most cases, it doesn't take place. So the wasiyah is at one-third. You can dispose of it. Now from the balance, which are going to be allocated to the fard beneficiaries, right? You have those who get fixed proportions and those who get the residue out of that balance.
Yes.
Right. So who are the beneficiaries of the fixed proportions? Those are the ones that Allah subhanahu wa ta'ala quotes in verse 11, verse 12, verse 176. And the important point about this is it depends on your family situation on the day of death. That is why you'll always see the world says, please distribute my assets in terms of Sharia.
Yes.
It can't say mention people because you don't know who's going to be alive on the day of your death.
Of course.
Okay. So typically what happens on the day of your death, you assess the family, okay, and you get a certificate from an ulama body to certify based on what this has been disclosed as a family members. You then are given the proportions by the ulama body, and you use that certificate as the executor to do the allocations
Yes.
of the wealth. Important to note is adopted children don't form part of that. Your stepchild don't benefit out of that. Your ex-wife don't benefit out of that. It's very clear. It's those that Allah subhanahu wa ta'ala mentions in those 2 or 3 verses. Now, typically to illustrate the point how this works, most of this, by the way, is available on the inheritance websites, and you can key in your family permutation and it works out the proportions. But just to illustrate that, for example, a husband dies, leaves a wife,
Yes.
son and daughter. The wife, it's been prescribed when there are children, will get 1/8 of the wealth. The son and daughters will get the balance on the basis of 2 to 1, the son getting twice as much as the daughter.
Yes.
Okay? If there are 2 wives, they share the 1/8. There's not more available, they share the 1/8. If he had left parents, the parents will inherit 1/6 each, the wife will inherit 1/8, the balance, that's the residue, goes on the ratio of 2 to 1, effectively.
To the son and the daughter.
To the son and the daughter. I'm just using this to illustrate the proportions,
Yes.
effectively. If he had left a wife and parents, but there were no children,
Yes.
the wife will inherit 1/4. Okay? And the parents will inherit the balance on a 2 to 1 ratio.
The
effectively.
3/4.
Yeah, on a 2
Okay.
to 1,
2 to 1
ratio, effectively. If, for example, let's take another permutation, you only have daughters. Okay? If the father dies, the father dies, and you have a daughter, one daughter, she gets 50% of the estate. The mother still gets 1/8.
Okay.
So these different proportions, without getting it confused here, is easy to see if you go to the various websites and computate it from that point of view. So it's important to know what your family, who possibly will inherit, okay, and for you to understand that, not to make the assumption that your adopted child will inherit, your stepchild will inherit, and more important, to use the 1/3 wasiyah to cover those that you love who don't qualify as fard beneficiaries.
Okay. I mean, Shaukat, you've touched on the 1/3. In terms of now inculcating your Sharia compliant will in estate planning, let's just briefly touch on that.
Well, I think, obviously it's a real challenge in the sense that I've explained to you. But the one important thing, one message which I want to leave is do as much as you can in your lifetime. Especially when you're concerned about your spouse. You just heard, if there are children, she inherits 1/8 or 1/4 when there are no children. She's been your lifelong partner. Do things in your lifetime. Part with your assets to her in your lifetime. It's free of donations tax. Because I just said to you, any donation between husband and wife is going to be free.
Yeah.
So to wrap up, the one planning tool which I want to leave the viewers out there is do things in your lifetime. You can't do the things purposely to avoid the allocations.
Yes.
But when it comes to the spouse, do things in your lifetime because she's been your lifelong partner and she's built the wealth with you. And she's made a contribution to building the wealth directly or indirectly.
Yes.
And therefore, I would encourage viewers to look at it from that point of view and then leave the balance to be dealt with on a Sharia compliant basis.
And especially with the third portion that you mentioned for your grandchildren, etc.
You could
to continue that legacy.
You could do that, but nobody that qualifies as a fard beneficiary can get out of the third.
Of course.
Okay?
Yeah.
So if my father's alive and my grandfather's alive, my father will inherit, my grandfather will inherit, but he can get out of the 1/3. Okay? So assess the situation, consult somebody, but don't assume that it's as simple as that from that point of view.
Shukran Shaukat for that. Do stay tuned next week as we'll continue on investment matters. Shukran. Assalamu alaikum wa rahmatullahi wa barakatuh. Assalamu alaikum and welcome back to Investment Matters, as we'll continue our series on financial planning with our guest in the studio, Muhammad Chaffer from Moja Financial Services. Assalamu alaikum, Muhammad.
Wa alaikum salam, Adnan, and to the viewers.
Muhammad, last week we looked at investment management as one of the aspects of the financial planning process, or the financial plan that is put by the advisor. And we looked at unit trust specifically, and you touched on equities and the various asset classes. What other asset classes are there within a unit trust investment vehicle, so to say?
I would term it different categories of unit trusts,
yes,
for argument's sake, as we touched briefly on, Adnan, that within unit trust, firstly, you will determine your risk profile. You know, am I going to be aggressive, moderate, or conservative? Then we need to say which unit trust class are you going to go into?
Yes.
Are you going to go into resources? And I'll touch briefly on the different aspects of it. Am I going to go into a general equity fund? And then also the other thing is many of our investors are they want the investments to be strictly Sharia compliant, and we can touch on that also. Then we talk of a property unit trust, we talk of balance fund, income funds.
Yes.
So there are different, there's prudential funds, and these are all fancy words, Adnan. But for the investor, they need to understand what is it that I, as an investor, what is it that I want to achieve?
Yes.
Now, let's touch, for argument's sake, on resources. Now, resources, unit trust that is made up of resources that will hold resources, mining and resources, gold, platinum, uranium, iron, and those type of shares. It's a very cyclical unit trust. It will go through the cycles for instance, currently resources is at the bottom, particularly with what is happening globally. Europe, as we know, and Abdulaziz very aptly explained what is happening in the global markets with Europe, the battles that they are going through, what's happening in China, and then all this was started in the US. So this has got an impact on the manufacturing industry. And that itself, again, will have an impact on the resources. People are not going to buy as much because of cars. They're not manufacturing as many catalytic converters. So platinum is not being used. So the price of platinum will drop. The simple example of demand and supply, as the demand increase, the price chases up if there's no demand, the price then drops. So you need to understand that where am I in my investment cycle? Do I want to hold resources? Personally, I love resources, particularly if you look at over a long term, because it gives fantastic returns. Then I need to look at, am I going to place my money in a general equity fund, which will have resources in it? It will have different aspects. Now, this is where it's important that you need to be clear with your advisor that I would like my investments to be Sharia compliant. If it is going to be Sharia compliant, the advisor then is restricted to look at certain funds only. Particularly, you would look, for argument's sake, the Kagiso Islamic Equity Fund, or the Kagiso Islamic Balance Fund. That is but one of the two of the funds of many other funds that's available. But the advisor then will be restricted to those funds. And we know that the Sharia funds, then within the Sharia funds again, you have different filters that the fund manager or the investment house has to abide by. That's it. Yes. Yeah, you know the story, Adnan. So different criteria then applies to those funds, and it's important that the advisor explains this to the potential investor, all these different permutations and aspects of a fund, because Adnan, as an investor, it is very important, and I said this a couple of times already, that you need to take responsibility of your financial plan. Yes, the advisor will develop the plan for you, but you as an investor take ownership of it. And you need to understand what my portfolio is doing. I'm not saying that you need to understand every detail, but have an understanding of what unit trust is. If I'm going to invest into resources, currently the resources market is not doing, the resources sector is not doing well. you need to understand this, because if you as an investor take wrong decisions, for argument's sake, what happened in 2007, 2008, you had certain people withdrawing or redeeming their funds at the wrong time.
At the wrong time.
And
Yes.
then to make that up,
Yes.
because we know over the next 2 years,
Yes.
the market or certain funds gave a return of, over the next 2 to 3 years, gave a very good return,
Yes.
because it made up the 46% that the market dropped during 2007 and 2008.
I mean, Mohammed, you within a unit trust vehicle, I mean, it's a fairly flexible investment vehicle that allows you to sort of make contributions at any time, to move from one unit trust fund to another unit trust fund, or one asset class to another asset class, because obviously based on your risk exposure, etc. And a lot of the times within the industry, and because it's driven by emotions also of an investor, they tend to do the whole switching from one fund to the other fund. How detrimental, or the impact of that on your investment?
Adnan, you're touching on something very, very important. Firstly, let's deal with the flexibility. Why unit trust is such a fantastic investment vehicle. It's very flexible. We will touch on property. I don't know if we will have the time in this program, but we'll touch on property as an asset class. But for argument's sake, if you invest in property is an illiquid investment.
Yes.
For instance, particularly, it's very fresh in our memories what happened in 2007, 2008.
Yes.
When the property bubble burst, what people then typically would do is the term that they would use it, they would sit it out.
Yes.
People who bought a property as an investment, you sit it out. Now, I ask a lot of people, when your fund is underperforming, why do you want to then jump out of that fund and go into another fund? If we know that the asset manager is a good asset manager.
Yes.
Because funds, as sectors, as different asset classes, also goes through cycles. In fact, it's a pity I can't show this now, but I've got a graph where it shows over a period of 6 years,
Yes.
the top 6 funds and the bottom 6 funds. And you can see how a fund manager for 1 or 2 years will be in the top 6, and the next 2 years will be in the bottom 6. Now, if you're going to be what we call fund hopping, or chasing or jumping from one fund to another fund because you're chasing the best performer, you're in for a hiding, Adnan, because you could be getting out of this fund into a next fund where that fund is just about at the peak of it.
Yes.
Now you're going to sit there for a year or maybe a year or 2, and now you're chasing the next fund and you're getting that fund just, And also you must remember, when we invest in unit trust, most people would invest in unit trust on a monthly basis.
Yes.
Now, when a fund is going down or it's underperforming, you are now getting the opportunity to buy the units at a cheaper price.
Correct.
Now, if you're going to jump into the top performer or the better performing fund, you're now going to buy that fund at a premium.
Yes.
Whereas if you stay in this fund, as I said, if the fund manager you're comfortable with the fund manager, if you're staying in that fund, you are now getting an opportunity to buy units at a cheaper price.
Yes.
Yes, if you're putting in a lump sum, then the criterion and the analysis of that fund is slightly different than for somebody who's investing on a monthly basis.
I think the fundamental lesson of that as well is that you can't time the market. So hopping from one fund to another fund, it's very difficult. The probabilities of you making that happen for yourself over a period of time is probably very slim.
Absolutely. Yes. And the saying goes, it's not how well you time the market, but rather time in the market. Yeah. So I'll end off on that.
Shukran for that, Mohammed. To stay tuned again next week on Investment Matters, as we'll continue on financial planning. Shukran. Assalamu alaikum.